So, good afternoon, everyone. Welcome to zila 2.0 webinar on intraday trading setups. So, let's wait for other participants to join as well.
Hello.
Yeah, please go ahead. Ask your question.
So, can we use Ninja-traded data feed to AMI broker?
If you're using NT7, you can use AMI broker, but global data feed as of now, they don't have products which combines. If you're using eSignal or some other vendor like True Data, you may get NT8 and AMI broker simultaneously. But in JDFL, you need to have a different subscription. I have two subscriptions. One is for AMI broker. This one is for
Okay.
the other one which I'm using is for Ninja Trader. Here, this is a different subscription package.
So, two different things.
Yeah, two different things. Yeah. So this is from Nimble NT. This is exclusively for Ninja Trader.
Okay.
So in the morning, what we had seen patterns, how to trade, look below the balance and fail, and when you can expect look above the accelerate and continue, what we can expect. And we've seen closely some 7 ABC balance setups. Right? Well, it's everything is only from ABC balance setup. Some of them are mean reversion patterns. So one is the ABC multi-day breakout with serious elongation, where A period trades inside the range. B and C does the breakout, multi-day breakouts. And the second one is an ABC elongation on a reverse mode, where A period breaks the multi-day high and B and C returns back into the trading range with a serious elongation. But still, it haven't broken the previous day low. In that case, you can expect the C period will be the day's low. Possible, expect momentum exhaustion at C period low. Expect momentum exhaustion at C period low. C period low. Okay. Next comes the ABC flip. ABC flip has to be combined with global emotional sentiments, right? So letter A period and B period breaks the day low because of global emotions, and C period completely flips back into the previous day range. That is a clear sign that despite the global emotions, markets are not going to go down. Who are shown up in the morning are serious sellers, are not serious sellers. So just go and take the other side of the trade. Market is going to do a complete short covering rally. That's what we can understand from this. And the next one is ABC continuation pattern. So we have 4 continuation pattern. Most of the continuation pattern provides intraday opportunities also, along with that positional trading opportunity also. One such pattern is the ABC outside bar, right, where the price opens gap down and completely turns into ABC. Price moved to the other side. It breaks a day high also. I mean, initially it breaks a day low, and then later it goes and breaks a day high. It becomes an ABC outside bar pattern, where the A period does a strong drive. Here, A period does a strong drive, and B and C breaks the previous day high. That is it's a complete outside bar by 1049 itself. That is a sign of an continuation pattern, positionally as well as intraday perspective also. Right. Next comes the ABC elongation with a single day breakout. Just continue. You can expect a P-shaped profile. Either price can balance here or price can auction higher. So it's not a sign of a reversal. It's not a sign of a reversal. So don't try to fade if there are any B and C single prints. Hardly it gets cleared. If it is not getting clear, that itself a sign of a strength that this is gonna continue. It's a strong auction as well. So that is how the 5th one goes, and the 6th one is ABC elongation with a gap up. A gap up and then a multi-day. Gap up also comes with a multi-day breakout at A period. A period itself, it's breaking multi-day high. It is a sign of an serious money. So you have to check first 1 hour volume, right? And also at the same time, it also says like fresh money is coming right from the opening itself. Usually they don't come, but this is one special scenario where you can find OTF traders coming at the opening itself. So first 1 hour volume should be confirmed. That gives us serious clues whether it is a serious volume or not, whether they are serious buyers or not. And then lately B and C, it goes in the same direction. Previously at the A period itself, there is a multi-day breakout, right? So that is a clue there. A period multi-day breakout with strong volumes, and B and C period continues, it's a sign of a continuation. Then final thing is ABC late reversal. It is where the one of the place where the inventory getting long to too long. By the time price opens inside the range, A and B trades inside the range, and C period does a sharp breakdown. It totally looks like ABC elongation, but then it is a single day breakout or multi-day breakout. It doesn't matter. A and B trade inside the range. C period elongates all in a sudden down or all in a sudden up. They are a sign of a serious trend reversal from an intraday perspective as well as from a positional trading perspective. You should not fade towards B and C zones. Instead, you can consider that as a resistance, as your entry point, as a stop zone, and then you have to do intraday trades using that. Actually, we have seen a couple of examples in the morning, and now we are going to look into another set of patterns. So these are another set of documents I'll be sending you once this is done. The very first thing is ABCD balancing. It's ABCD balancing or ABCDE balancing in the morning, followed by a fast tempo where the price goes down below the value area low. And if you look from the charting perspective, it will be looking like this, more or less. You'll be seeing an letter A, B, C, D, all will be balancing. Letter A, letter B, letter C, and letter D, and at times letter E also. So all the letters will be balancing, and point of control would have been formed. A, B, C, D, and E would have been balanced at the center. Point of control would have been at the same zone, right? So 5 times the point of control would have been formed. And lately, price when it's coming down, it comes a bit faster. It comes a bit faster. The tempo was really fast. So that is a sign that it is a sign of a weaker setup. Most likely, the point of price is going to mean revert towards a point of control. Or at times, it will be forming. When it is falling, it will be forming with some weaker lows. So maybe one more weaker lows would be there. Let's say when it is falling down, it could fall something like this. It falls again. It goes exactly and does a deeper correction. It will be a zone where it will be a weak high. It's an intraday weak high. What you can anticipate is that when the price is rotating back, at the day's low, you're going to see some momentum reversals. Some sort of momentum exhaustion setup will be there, and the momentum exhaustion, it can also come in the form of a hammer or some sort of a momentum auction reversal or R delta. It can be confirmed from the order flow, especially when the price is steeply falling fast. It's going to give you some sort of a confirmation over there. The first thing is price goes towards the weaker high if there is any, right? Or it goes towards the point of control. That is the ultimate target for the day. Once it is done, you are done for the day, right? Or if from the order flow perspective, if you are looking from a momentum here, momentum auction exhaustion here, we can expect a revisit towards a VWAP. But first, the clue is that it has to form an ABCD or ABCDE balancing. That is the first clue. That is the first clue over here. I'll mark this as number 1. Second clue is the tempo. The tempo is how fast the market is falling. How fast the market is falling. It falls really fast. One of the candle, there was a long liquidation happen. All of a sudden, price would have been went down. And you can feel the move. That move would have been 30, 40 points or 50 points in that half an hour candle. And that would have been came really fast in terms of time. And then despite that, the market does a mean reversion. So one of the days it happened recently in Nifty. In Bank Nifty, I'm not able to recollect, but
I think on expiry date.
On expiry date. Recently it came 2 days back, it was there. Here. So similar patterns, you'll be able to see that. So what you're seeing here is an A, B, C, D, E, in fact, F. up to F, the point of control initially got built over here. Up to ABCDEF. This is the morning setup. It was a lot of balancing over here, and price is going down. And in fact, there is an G and H. There is a weaker pattern, or at times it could be exactly at the day high, or exactly at the exactly at the previous day high. And you can also see that this is one odds. This is one odds that what is this? This is one odds that it's a weaker high. That's one information. So this is information number one here. Information number two, there is a weak high. Maybe if at all price can revert back. It not necessarily has to get clear, but if your odds are increasing, it can get clear, right? That is one thing you can understand. And look at the J period low and the I period high here. It's a weaker reference. Price got sells off exactly from the previous day low. So again, if you draw a reference line there, the J would have been fallen. I mean, I period would have been fallen exactly from there. That is a weaker reference. So 1, 2, and total 3 information there. 3 information there. It is not just ABCDE balancing, right? It's ABCDE balancing followed by some mechanical sell-off and followed by one more mechanical sell-off. That is where you can expect price to first go and expect this to get a clear around letter I. Second thing is maybe expect a clear around this, and third is towards the point of control. You're done, you're out of the game, right? And that particular day, the VWAP was around 10,920 levels. 920 levels is where the VWAP was, but the point of control, it came and revisited the point of control till 10,930. In fact, it went higher also, but that's fine. Now you cannot able to judge every trading activity. But when you get these kinds of odd information, right? So what is happening here is that a lot of trading activity happening. Point of control is getting established here at point number 1. Point of control is getting established over here. Higher the odds that point of control is not likely to shift. Second thing is that some mechanical thing is happening. That is fine. That could be one of your targets if the market is going to reverse. The third thing is that, third is what? Third is the price is exactly at the, falling exactly from the previous day high. That is the third thing. Fourth point is price is plunging below the value area low. Price was plunging deeply with a fast tempo. Tempo was fast. Number 4. Price is below value area low. Price is completely below value area low. Emotional sellers. Number 5. All these odds says that market could go and mean revert towards the point of control. Max to max, that is the level you can anticipate, which roughly comes around 10,920 or 10,925 levels, and you're out of the game, right? So when the price is really breaking down, you have to look into those odds. What are the other information? Why it has to mean revert back, right? So when you are seeing a lot of weaker reference level and its price is falling down really fast, that is only to scare the participants. And lately, all the weaker sellers, all are weaker hand sellers. I'm able to spot on weaker hand sellers over here. I'm able to spot on weaker hand sellers over here. And the late drop, again, all these are, I don't know how drop it could go, but I can understand that this is a weak seller. This is a weak seller and the price is going down. So somebody was asking on that day, can I go short? So it's like no fresh shots at least. Right. So whereas complete reversal is a surprise there. Any questions on this? That is the rule number 1. So you have an ABCD balancing in the morning, followed by a fast tempo where price goes outside the value area, typically either the day high or a day low. Intraday mean reversion can be anticipated. Timing should be somewhere around 12 o'clock to 1:45. If any faster tempo on the downside or upside move, it has a high mean reversion odds. But avoid if balancing at the edges or spike coming after 2:30. So the thing is that if the same thing is happening after 2:30, if that kind of price is breaking down after 2:30 or 2:45 or 3 o'clock, don't try to do a mean reversion because it could turn into a spike mode. So anything before 2:30, if it's happening, you can think about fading the odds, provided there are other clues saying that price is touching exactly at the previous day high or previous day, and other mechanical references saying that all are emotional sellers and they are mostly chasing the price. Who are chasing the price are mostly short-term traders from an intraday perspective, where you can see visual reference level exactly at that bar high or a day high or a previous day high, previous day low. All are short-term players, which has higher odds of saying that all are going to get trapped in the in that particular day, right? Which has an mean reversion odds. That's a fantastic trade setup. It usually comes in a month twice or thrice in single scripts. That is how institutions gets most of their liquidity. Oh, that is where the emotional sellers get trapped. Those are the zones where emotional sellers get trapped. Next comes the multiple weaker intraday references. This is also one of my favorite setup. Right? So it will be coming something like this. How I can say, to give an example. Let's say this is letter A period. Letter A period, it went down. Letter A period, it went down. But it bounces back at B period. It bounces back at B period. And C period again went down. But if you see the levels are exactly matching reference, we call that as a weak high. There's one weak high there. And price started sliding down. And it creates one more weaker high, maybe at, let's say, like I period and J period. I period, A period, and J period. It is not, but it is not ABC balancing, it's something else. But we have two weaker highs now. Weaker high 1. So this is weaker high 1. And this is weaker high 2. Two weaker highs. Probably the value area would be something like this. Again, value area plunges down. Not necessarily it has to be ABCD balancing. There are two weaker highs over there. So those are the weaker highs saying that only trading money has been doing trades like this. Maybe one more low, which has been coming over here. It comes one more sells exactly at previous day low. So that is point number 3. If you're having such 3 or more odds, or 2 or more odds, price always have the mean reversion to clear this first, second the weaker high, and third the other weaker high. So you can expect some late recovery. If you're seeing more and more mechanical players are coming and participating at the day's high or one of the 30-minute high or at the previous day high, or your combinations of everything, 2 or 3 such odds are there, you can expect a late rally in the markets, right? So late rally maximum target is only up to the 3 reference level, 1 and 2 and 3. These are the 3 reference level you can watch out. Up to that, then market will try to do something else. Any questions on this, what I'm trying to say here?
Rajanu, can you repeat this setup? It's a bit confused.
Okay, so let's say letter A formed, it went down. Letter A went down, okay? And B period, it just got back up. A lot of retracement. It's a B period, got back up. But let's say C period again went down, but D period came exactly to the B period high. Exactly to the B period high. And we call that as what? Intra-bar weak high. It's a weak high still. It's not coming at the day high, but still intermediate weak high, intra-bar weak high, where the B period and D period lows, highs are exactly same. It will be exactly matching. And again, price is trying to fall down. It comes back at other period, let's say I period and J period, sell-off starts. J period again sell-off start, it breaks the A period low. And again, K period, it comes exactly to the previous day high. I assume that this is previous day high. Price got stopped exactly at those location. Assume that that's a K period. K period again, price drops. K period again drops, maybe In such a case, if there are more number of weakness number 1, this is a weakness, this is a weakness, and those are target zones. If at all, if you want to look for a mean reversion zones, those are target zones. First, expect price to go and clear this reference. Second one is towards this, and third one is towards this. So 1 and second targets, and final target is towards the final weaker highs. You getting my point?
Yeah. Yes.
Okay, great.
Rajendran, here inventory and all that you don't keep track. It is only for pure intraday or some other reference apart from this also.
So here we are taking only intraday references here.
Okay.
Rajendran,
Yes.
are all intra-bar weak highs are meant to be
No.
only in some such cases like this?
Only if there are multiple setups, or let's say a combination can become with some more odds, right? So let's say, but if there is a weak high and the price is plunging down below the value area low, you can expect a mean reversion towards that level.
Okay, but
Not in every case. Not in every case. If you look into, there are a couple of 2 week lows still not cleared, I think. Those and all, you have to let it go away. In Nifty, I think this is Nifty, right? Nifty. I think here you can see there is 1 week high. So this particular day, there was a weak high there. So there is no point to fade that. There's no
weak
point.
low or weak high? That's
It's a weak low. It's a weak low here. You see that it's having same exactly same lows over there.
okay. That was not traded yet.
There isn't?
That was not traded yet. It has to come there now.
No, not necessarily. Not necessarily. So they are mostly intraday targets. I'm talking about intraday targets.
Okay.
Positionally, we don't carry forward this information.
Okay.
Positionally, we don't carry forward this information. But if you are seeing this information and weaker patterns are developing, then all you can do is you can expect that level to get clear from an intraday perspective.
Here it was not cleared, no? So what is the reason it was not cleared actually? The intraday weak low was not cleared here.
Yeah.
I mean, any reason like any setup there for that?
So there is only thing about this the F period, right? It's getting down below the value area low, right?
Okay.
And it got back in, and then it creating the weaker high. In that case, not necessarily it has to get a clear. Not necessarily it has to get a clear, but most of the times intraday odds are the intraday it forms, intraday it clears. But we don't carry forward this reference. It's an intraday reference, right? So that reference we use as a target, one of the target level, especially when you have a weaker level at the inside the range. When you have an weaker level inside the range. This is one example here, where the weaker high references are there. Again, price went down. Again, there is a weaker high at I and J period. Again, price went down. There are 2 weaker highs now. So in that case, you can use that as a primary target levels. More you are going to see such weaker highs, more the odds that you are going to deal with intraday players. One weaker high doesn't mean it's like you are dealing with intraday players. Let me give you one more example. Let's say this will be a different kind of setup, but it helps you to understand what kind of context is going on. Okay, let's say I recommend people to mute yourself if you are not mute. Yeah. So let's say this is previous day high and previous day low. This is previous day high, and this is previous day low. Previous day high and previous day low. Let's say price started here. Letter A started here, and this is a half back. This is a half back. HB. Let me draw a line like this. And the price initially plunged, and then it got back exactly to the tick at the half back. At C period, it went to the half back, and sell-off is happening there. Sell-off is happening. And again, when it is breaking day low, it's coming back again, probably at I period. And J period, it sells off exactly from there. J period sells exactly from there, and it again plunges below the day low. Price is also below the value area low. In such a case, now there are two odds are there. One is exactly at the half back, intraday players. Second one is exactly at the I and J period. Again, they are intraday players. Price is plunging down below the value area low. It also took down the previous day high low as well. So previous day low, previous day high. In such a case, there is odds that price can come back and clear this I and J period, and maybe towards the point of control levels or the C period weakness. Exactly, it's got sold off at C period. Those levels can get cleared if you are seeing these kinds of patterns. So, but always that I and J, those kinds of weaker highs or weaker lows, which is coming intermediate between the profile. We don't carry forward. We don't carry forward that information if it is happening inside the profile. But if that is a weaker high or a weaker low, which is coming at an extreme day high or extreme day low, then we will carry forward. Which is something like which happened in Nifty. This information we'll try to carry forward. It's a weaker high relative to previous day. It's a weaker high. This high is a weaker high relative to 2-day high. So 2-day high, if you compare the 2-day high, today's price is just only 1 point, and it went down. It haven't cleared for the day, and that is a short-term reference. Otherwise, which is coming inside the day, it is more of an something like this. The G and H period, they are mostly intraday reference. If it is not getting clear, we don't even bother about it. We don't use that as next day. We will not come and say like that weaker reference has been cleared today. That even if price comes and clears, we don't consider that as a reference. If it's not getting cleared, just leave it out. Don't try to fade tomorrow or some other day expecting that weaker low has to be taken out. That is mostly an intraday reference. Whichever the reference coming inside the profile or intraday reference, whichever the side which is coming at an extreme, and if it does not get cleared, it is a short-term reference. Am I clear?
Hello, sir.
Yeah.
For example, there is a weaker higher low in intraday level. If it is not filled, next day there is any effect. Something effect is there because there is weaker sellers in previous day. On that day, that is reference point. All of the retail traders, otherwise, whoever it may be, they will observe that point.
Yes.
Yesterday's previous days. Then why it doesn't affect to that on that place?
Come again. I'm sorry, I missed your question.
Actually, my English is not that much
No,
good.
that's fine. You're explaining properly only. Just
there is a weaker higher, weaker low. For example, today.
Okay.
Tomorrow, whenever price comes to that level, but for example, it is not filled.
Okay.
Then next day or tomorrow or whenever it may be a price they come to that place, and then I think
the price is coming to that level.
When
it's breaking, you can expect some sharp breakouts there because some stops would have been placed on the upper side.
Okay.
It is nothing but some stops are lying over there, and that a good auction will not be this mechanical. This is not a good high because it's a weaker. That's why we call that as a weaker high, because the price is just one tick above 2-day high. It is usually a weaker high. So price often fades those levels faster.
Okay, sir.
Yeah. So what we do is let's take some small break here, 15-minute break, and then we'll go in one shot. Let's take a small break here. Let's take a 15-minute break. 15-minute break. And we'll assemble back by 2:50 p.m. We'll assemble back. Right? Until then, I'll be on pass mode. I'll be on mute. So let's discuss about the second setup. Two setups we discussed so far. One is the ABCD balancing, or we can also call it as at times it can come in the form of an ABCDE balancing. A, B, C, D, E balancing. We also discussed about multiple weaker intraday references. Multiple weaker intraday references can come in the form of an price coming and touching exactly the previous day high or previous week high, a weaker reference, or it can be in the form of an half back, something like a half back. So those are weaker references. To narrate this example again, maybe I can let's say, to narrate this example, let's go back to the charts here. And let me clear all the stuff here. Let's say day opens here. Letter A opens, day is open, and letter A period done like this. So this is letter A, and here is the open. This block is the opening point. And B period soles off exactly from the open. That is kind of a weak high. Right? It is nothing to worry about it. It's just an intraday reference. But letter B period got sell off exactly from the open. Again, it is a kind of a weaker high. And price comes down. And again at, let's say, G period, price sells off. And next letter, H period, again, it is a weaker reference. It forms a weaker reference again. So weaker reference here, weaker reference here. So one weaker reference here and two weaker reference there. And price going and plunging, it has the odds of coming back to here and towards the other levels. So these are the zones where you find more and more weaker highs, intraday high, are more followed by that price is selling down below the value area low. It is a sign of a mean reversion is more likely to come, more or less. We are dealing with more and more intraday players. Their staff will have been hunted down. So price usually travels where the weaker hands are initiating the trades. Price goes and revisit those levels. So those are the anticipation you can have it on that particular day, right? And next comes the rally high or a pullback low, especially if it's going to be a 45-degree line on the last 45 minutes. A 45-degree line or a rally high are the signs that in the next day price opens, it's going to be, you have to take a decision at the opening itself, whether you want to take an immediate long or not. Right? So most of the 45-degree lines comes like this. Assume that this is a Friday rally high. You have a Friday rally high, and price started accepting above this rally high faster. So the moment price crossing, you have to initiate the trade and you have to monitor. Right? So all you have to do is, and you have to expect a continuation. Failure to continue and price started moving in B period, it's not a sign of continuation at all. So better step away from this rally high. So this is a rally high. Or at times this rally high will be a sign of a 45-degree line also. 45, it's kind of a 45-degree line. So what is a 45-degree line? In a 45-degree line, what happens? Here is the value area. Point of control would have been formed over here in this band. Here is where the point of control would have been formed that particular day. Price would have been plunged lately, but slowly, steadily, price comes and closes around the point of control. Maybe they can come and close very close to that, here, or slightly here, a little bit of higher. All these, it looks like a 45-degree line. If you go and check the composite profile for the day, if you check the daily profile of the day, it looks like a clear 45-degree line. 45-degree line. So on such a case, the very next day, you can expect a opening with a gap up, or at least even if they're opening casually, you can expect a first move, you can expect a drive at the opening itself. At times, from the opening itself, market started moving up. Like it could convert like a kind of an open drive, or very rarely it opens with a gap up and inventory is long to too long, then the sell-off happens. Right. So 45-degree line or a rally high, the importance has to be provided over there. Where the very next day itself will be, you should be on a high alert to take a trade over there. Right. So we give more importance to rally high and 45-degree line. Pullback low, it's quite tough to trade, but that pullback low acts like an kind of a support zone from an intraday perspective. And that is the third setup. The fourth setup is on the spike, right? So spike acceptance. Here we are talking about a spike acceptance. There are two ways you can expect a spike acceptance or a rejection. We are going to talk about this spike acceptance and a spike rejection. First, we'll talk about a spike acceptance. A spike is what? Spike is like something like market was balancing. There was a bigger balance built, and middle of the day, price plunges and it creates a single print zone. There are a lot of single prints, and finally price elongated to the downside. In the last 45 minutes, there was a strong spike down in last 45 minutes, where the point of control not migrated, only price migrated. Maybe price would have been close at the extreme, previous day's extreme. And here is the spike base. Here comes the spike base. Spike base, right? So spike base. So next day opening itself, price opens and it starts a drive at the A period. It is a bullish sign. You have to go in the direction of the breakout. Maybe at times they will, if there are any 2-day low will be there, they go and get the 2-day low. All these things would have been happened because of overnight US markets are collapsing, our European markets are going down. Because of that, our Indian markets also would have been gone down. And next day, Dow Jones would have been negative. Everything would have been negative. Global markets will be negative. But despite that, our market goes up and it takes a drive. It accepts above the spike base at the opening itself. This would have been happened within the first 5 minutes or 10 minutes or so. You will start seeing that price start accepting above spike base. That is a sign that it's a complete reversal is about to happen. Just onboard onto your trades. Maybe it could look like a 30-point trades or a 40 points higher compared to the previous day high, but you have to onboard immediately and you have to consider monitoring that. This level, because it's going to be a high confidence, the spike base is going to be get accepted at the opening itself. If it's a rejection, what happens? Price opens here, goes up, comes back in, and letter A will be letter A would have been rejected, and the B period would have been seeing that price started trading lower, and C period lower. That is a sign that it's a mean reversion trade. It is a mean reversion trade where the spike has the more odds of the price letters A, B, C are going to trade lower, higher the odds that it is a sign of a rejection. So you have to take a mean reversion trades. It is kind of a rejection there. A spike base can also be treated something like this. It depends upon where the price is opening. That matters a lot. So let's say instead of here, price started trading somewhere in this band. Let's say if at all letter A got traded over here, letter B got traded over here, letter B and C and D. It's all are it's ABCD balancing or ABCDE balancing. And mid of the day, letter F is spiking up. F spikes up, and it creates a lot of single prints. And there was a value area here. Price is shooting above the value area high with a lot of single prints. The first thing you have to anticipate is that clear those single prints, fade those single prints. Then price got back into the range. Then even you can expect a late sell-off also. So those kinds of things are. It usually happens when spike base it's accepting at the late F period or so, or even an ABC elongation can also come like this. An ABC elongation. This is one more special type of ABC elongation, which we can consider that as a weaker one. Let's say we have the same spike base, Everything remains the same. But instead, let's say price opens gap down. Price opens gap down. We got a and a B and a C period, right? So C period was breaking the spike base. Letter A and B and a C. It could be a spike base or it could be double distribution reference level. This is one of the short-term reference. It could be some of the short-term reference in the form of a spike or a double distribution or any other single print zones. Price is coming and trying to break that single print zones. A lot of single prints are there. First thing is go and fade those single prints and fade those other single prints, if any. A and B, C, A and B period single prints. These are not a weaker, they are not a stronger indications. They are mostly weaker indications. Mostly you can expect a lot of, you can expect a lot of rejection over there with the greater odds at the C period high itself. Any questions here about the spike base scenario?
The spike base, we carry forward the reference only for next day, or it is a positional?
It's short term. It's a short term reference. The spike base reference is short term reference.
Next day.
Short term reference. So we have to carry forward positionally.
Okay.
So one of the example is in Nifty. It happened recently. So we got a spike base. So here is the spike base, right? So we got a spike base. And if we look into the structure, if we look into this particular day structure, we got a what? Kind of an ABCD balancing. There was ABC and ABCD. And the price is middle of the day, price was trying to break E period. And a lot of single prints, again, got back in. It is not a sell-off. Usually that spike base act like a supportive. If that is happening middle of the day, you have to really doubt that, right? So if it is happening at the opening itself, a good sell-off will be happening like price opens gap down. They started doing a lot of activity down and they tend to go down. That is how a good spike base acceptance comes in. More activity happens at the top and lately middle of the day price is selling off. That is not a serious sell-off. Got it? And there are weaker lows here. We don't even consider that as a reference. We just let it go away, right? Not necessarily those has to clear intraday or very next day, but we don't take that as a reference. So any questions on spike base? So there are three ways you can deal with that. One,
If the spike basis, I mean, in the downside means what happens exactly? If it in the downside, how it acts like a, if in the upside means it is above, it is like a support, no?
Yes. If it is happening on the downside, like the example which I provided here is a downward spike. Okay. The spike is a downward spike here. The spike here, it's a downward spike. Price went down, right? So next day, either it is happening A, B, and C. Lot of single prints. It can mean revert back, or A, B, C, D. It creates a lot of balance, and lately price is spiking up and coming back in. It is where we can expect a rejection. We can expect price to go back towards a point of control, and maybe even in the worst case, it can even start sliding further. Right. So middle of the day, if it is coming and accepting, then we cannot greatly trust those information. But if it is coming and doing some sharp activity there, a lot of single prints are there, then there are very tough odds that it's going to completely reject. That is a very rare one. But if you're seeing a lot of activity happen and then it comes and spikes, a mild spike above the distribution a little bit, which has the odds of price coming back to the point of control. And this could be a spike base, or it could be even a double distribution also. It doesn't matter. The rules remains the same. in a short term, we can say like it's a short term reference. So maybe I'll better rephrase this rule. So spike or a double distribution balance or triple distribution balance on previous day. If there is immediate acceptance about the spike base immediately, it's an immediate buy. Right? The second thing is the same rules here. This is rule number 1. Probably you can say like this is 4-1 and 4-2 is like you got a spike distribution and you're seeing an late test towards the short-term reference line, then expect rejection. Balancing in the first half and late just towards the short-term reference line, then expect a rejection from there. This is one more interesting setup. We haven't seen the setup yet, but I think in one of the November session, I shown some examples over there. So this is one of the interesting setup where it's a trend day. It develops like a trend day. But the trend day is slightly weird. A trend day is a good, you can say a trend day is having a good auction if, let's say the trend is, the letters are really powerful and the drive is very powerful. Like we can say like this kinds of trend day are really powerful trends. Maybe they have odds of balancing to next day or a further continuation on the uptrend, but they are really long and elongated trends. It's a stretched elongation. But there are times what happens, this will be letter A. It comes like this, and B, this is letter B, and C would have been a lot of single print, let's say, and let's say D, E, still it will be one time framing, but you can see that it is very tight and goes slow and steady. F, it will be irritating trend day. You might seen this very rarely. If you're seeing next time, you are aware about this. F, G, H, I, J, and K, and L, and in fact M, something like this. You can see that lately all will be crowded over here. All are very close to close. Whereas here you can see the distance coming in. The distance will be relatively bigger. This is one good trend day, right? So maybe this can have higher odds of continuation. But this trend day is saying that all are crowded uptrends. So mostly short-term players are in control. The very next day you can expect some inventory correction to happen. So you can expect a BTST short over here. You can expect a BTST short because all these days the inventory got piled up. The inventory never had released into the system back. So the first thing happens on the very next day is that there will be inventory correction followed by something else market will do. But you can expect this movement the very next day. If you're seeing in trend day with one-time framing is what? The previous bar low doesn't breaks the current low doesn't break the previous bar low, and it one-time frames by keeping continuously forming the higher low formation. It keeps on forming higher low throughout the day. But if you compare the lows are very crowded and it's very near to each other. That is where you can expect a inventory correction. The very next day opening itself. Maybe next day itself that you can expect a gap down also. And it makes a low and then it stops doing that. So you can expect some sort of a gap down. Not a bigger gap down, but there will be significant correction will be there. Maybe in terms of Nifty, this day could be 100 points up. This day, the entire day would have been 100 points up. 100 points up. And next day you can expect some 40 to 60 points would have been really, price would have been opened lower. So that inventory corrections happen at the opening itself. Our price opens casually and then a drop comes and then price stops there. But you can expect this drop. You can expect this drop at the open. That is why it is a BTST opportunity. I mean, it's not BTST, it is STBT. Sell today and buy tomorrow. Sell today, buy tomorrow. So what it's saying is that there is this particular day the inventory pileup happened, but nobody released the inventory back into the system. So one of the place where you can say like it's one of the place where the inventory went too long. So short term, you can expect a momentary sell off, but that doesn't sell off last long. So, but you can expect some gap down. That doesn't last long. That is the only information you can get from there. You can only use that as a BTST. STBT information. Sell today and then buy tomorrow at the opening or around 9:30 or 9:15. You close your positions. This is one trade setup. Again, other trade setups. So next is an A period inside bar, where the previous day range was very bigger, and it creates an the A period was very maybe it comes something like this. Let's say this is my previous day range. This is my previous day range, but it's having a bigger range. The range was very bigger. The previous day high and previous day low. The range was very bigger, maybe 100 points. Maybe it also contains some poor structures. Let's say in terms of Nifty, let's say that it's a 100-point range in terms of Nifty futures. And price yesterday closed over here. And in fact, price opens casually, but it clears all the poor structure. If there are any poor structure are there, or structure, let's say that previous day has a lot of anomalies, poor structure. And let's say the price opens here, it clears all the anomalies, all the 4 anomalies, anomaly 1, anomaly 2, anomaly 3, anomaly 4. It clears all the anomalies, but the letter A was an inside bar to the previous day range. The A period was, it's a deep plunge at the A period. It's totally an inside bar compared to the previous day range. It clears all the anomalies. Inventory is not long to too long. So in such a case, you can expect a mean reversion back, fading all those A period single prints. Right? This is one such pattern. This doesn't come usually, but what it happens is that the Dow Jones will be, the global markets will be mostly positive, and our markets, the Indian markets, yesterday it is bullish, today it opens naturally, but despite all of a sudden there'll be a deep plunge coming at the A period, and everyone will be scared of that, but still it doesn't broken previous day low. B period trades casually, but then completely it mean reverts back whatever the gain it does. So this kind of things usually happens in a bullish global markets. We open normally, but then there'll be a serious drop. That drop doesn't last long, and completely it mean reverts back. So these kinds of setup usually happens in a good bullish global environments. Okay, now let's talk about the next setup. The next setup is one-time framing against IB. Now this has been replaced. It's no more one-time framing against IB. We have a one-time framing classifications there. The one-time framing classification. Let's talk about those one-time framing classifications. The one-time framing classification is, let me pull up those one-time framing classifications. 2.0 here. We already talked about this one-time framing classification, but still we'll try to talk about it. We already talked about this, which one time frame to fade or which one time frame not to fade. And there is one more special scenario over here. We talk about all those setups one by one. I'm going to add to this one, and this is inside that it is 2, inside that it is 3, inside that it is 4, inside that it is 5, and one more 6. That's a special scenario, one time framing against one time framing. Okay, so there are 6 setups over here inside one time framing against one time framing. So which one time frame to fade and which one time frame not to fade. That's what we're going to discuss about it. If markets are showing high confidence, right? So then one time framing happens in the direction, then go in the direction of the one time framing. This is something like, it is not a trading strategy, but just an indication that you should not fade that market. This is not a trade setup, but this is a stronger auction. This is a stronger auction, but it is not a trade setup. You should not trade against this. That's the only information. It is not like you have to go long here. There is no indication, but you should not fade this auction. That is the indication here. Okay, so it is not a trade setup, but this is the indication that already a good auction is continuing. So don't try to fade it. It's like markets are having a previous day high and previous day low, previous day high and previous day low. So yesterday low has been broken, market started doing activity, and lately you're seeing one time framing here, 1, 2, and 3, and 4. Don't try to fade this markets because it's a high confidence buying. Initially the high confidence buying is on the upper side, and the one time framing is also happening on the upper side. So that is a sign of a strength. Don't try to do a mean reversion trades over here. That's what it means. So it means it is not a trade setup. It's just an indication that price is continuing with a stronger auction. Don't ever try to fade it, right? So that is the first one time framing information, and that is not a trade opportunity. Let's look into the second one time framing. The second one time framing says that markets are showing high confidence and one time framing is happening in the reverse direction, right? Then go against the one time framing. This is a trade setup. It is something like of this. Initially, the high confidence is on the buying side, but lately the one time framing is coming in the reverse direction. Reverse direction like this. Initially, buyer confidence is high, so that's why I put a mark over here. It's upward direction. The buyer confidence, buyers showed up. But the one time framing is all of sellers. The one time framing is all of sellers, but it's a high confidence buying. It's a high confidence. It's a high confidence buying happening over here. Then when you're seeing that mid of the day, this is around 1:30 p.m. Around 1:30 p.m. or anywhere between 1 o'clock or 12:45 to 1:30, you are seeing this pattern. So expect one more test towards a day high. At time price comes and tests the day high. At times it could turn into a spike also lately, right? So try to understand. That is one of the trading opportunity over here. Minimum you need 4 one time framing bars here. Minimum you need 4 one time framing bars. Maybe I can show you a similar setup in Nifty. Last month, similar setup arose. in January series. Not January, but December. I think this is the day. Not this one. Yeah, you can do this. So price opens very close to the previous day high. It does a drive, started building activity higher. It's a high confidence buying, right? It's a high confidence buying, right? Are you people able to reply me back?
Yeah, yes.
Okay. So it's high confidence buying and price was going up. Middle of the day, you are seeing this one time framing happening. In fact, in Nifty, it is not clear, but it was, I think maybe from Bank Nifty, I should be able to take the information. 11th December. 11th December, Bank Nifty, it was a one-time framing auction. 11th December. No, the 12th December. Yeah. No. So it's kind of an making an F, G, H, and in fact, I was kind of a one timing, but lately it got a clear. But it's kind of price was one time framing down. Price was one time framing down, and lately it took the price up. So if you are seeing that kind of information there, middle of the day, then you expect to see. Expect a test of a day high, but at times it can even go like this, like a straight uptrending rally lately. Right. So that is one setup, and this kind of setup used to happen very frequently. High confidence market, if reverse time framing happens, go against the direction of the trade. Are there any other setups here? This is one more setup like this. So it's a similar example here. You can see price opens here. Most of the trading activity started building lower. Point of control was here. Point of control was here. Lately, price was one time framing higher. Maybe I'll split and show you. Price was one time framing against the confidence, against a high confidence. At the F period there was a low. Again, G period, K period, and I period. It made a one time framing, right? So those are the signs that it's a high confidence selling is going on. Point of control started developing lower, and lately price is one time framing against the high confidence. That is a sign of a sell off towards the day low. That is a sign of a sell off towards the day low. The day low testing odds are there. So high confidence, if price is one time framing against a high confidence, then you have to take a mean reversion positions over there. This is a mean reversion trading opportunity. This is a mean reversion trading opportunity.
How about December 21?
December 21. Okay, December 21, what happened? One time framing happened? No. There are no one time framing, no?
So it should have higher lows, right? The one time framing should be higher lows, higher lows, and then
Yes, exactly. At least minimum 3 to 4 bars. 4 bars is the bar minimum to determine whether it's a high confidence. I mean, initially that should be high confidence, and lately around we will not look into this information. This one time framing we don't give preference. right? So you have to look into the one time framing which is coming around 1 o'clock. 1 o'clock, there is one time framing would have been completely set in 1 o'clock or 1:30 or maximum 1:45. The one time framing would have been set up like something like this. Price broken previous day low. Now it's dealing with a high confidence. Now one time framing is coming in a reverse direction. This one time framing are mostly intraday players. Market has the odds of selling off over here. But previously it should say like high confidence sellers, high confidence sellers. It should not be low confidence sellers. If it's low confidence sellers, then we will deal with a different way. Okay. And next comes the, if markets are showing bad confidence, that is markets are showing low confidence. One time framing is happening against the bad confidence, then go in the direction of the one time framing. This also usually happens. Market shows bad confidence, something like this, let's say.
I think yesterday Nifty example.
I'm not very sure. Let me check. Let me go back and check. Right. So this is previous day high, and this is previous day low. Let's say there is a sell-off activity is happening over here. Sell-off activity is happening. Initially, market would have been sold off. Right. It took the previous day low, but price got back into the range. Price got back into the range at B period or C period or E period. Price got back into the range, and mid of the day, we are seeing like there is a one-time framing developing. This is what point of control is inside the range. The point of control is over here, and middle of the day, the one-time framing is happening. That is a sign of a strength. Don't try to fade. It is not a trading strategy. Don't try to take a mean reversion here. It is a sign of a continuation. This is a sign of a continuation. So don't try to fade it. So it is a strong auction. It is a strong uptrending auction. So don't try to fade it. Either go in the direction of the one time framing, and that is a sign of that mean reversion is about to happen. Yeah, mean reversion happens. There will be late movement you can anticipate. At times it can even turn into a spike also. This has a spike odds. At times it can go and take a spike, deep spike odds, especially if you are seeing a weaker hand sell-off around ABC period or D period or E period. Point of control started building inside the range. That particular day, multiple times it would have been broken the day low, again come back in multiple days. This is my previous day low. Price would have been broken down and then come back in. Again, it breaks down deeply, again come back in. It tried to break down, it come back in. Many times it would have been tested at B period, C period and D period. Every time they are plunging down below the previous day low, they used to come up and point of control starts over here. And E period would have been done some activity, E and D. More activity would have been already here. And lately, E, F, G, H and I started one time framing higher. It will be very slow on time framing initially. Initially, all these one time frames happens very slow and steady. But then lately, the one time framing gets faster. So this is one time framing against bad confidence. Go in the direction of the one time framing. Okay. I guess it's the lunch. Okay. Anyways. Okay, so let me talk about the fourth one-time framing setup. This is 3 one-time framing setups. The fourth setup is if the markets are not at all showing any confidence, right? Price is completely trading inside the range. There is a absolutely no confidence going on. Neither the buyers are not confident, neither the sellers are not confident. But one-time framing is started happening. Then go in the direction of the one-time framing. If you look from the charting perspective, it will be looking like this. This is my previous day high, and this is my previous day low. This is low, and this is high. Yesterday's high and yesterday's low. And market started doing some lackluster activity. A lot of balancing happens. Price was doing a lot of crisscross activity. Maybe it forms an ABCDE also. But lately, what happens? The one-time framing used to develop here. It will be a very slow and steady one-time framing. Still, the price will be trading in the balance, but you see this one-time framing starts developing in the second half around 1 o'clock or 1:30. You'll be able to see this one-time framing happening. Just go in the direction of the one-time framing. This also has the potential to form like a spike. It's also having the potential to form like a spike. Maybe the IB would have been broken down there. The IB would have been broken down there, but still, despite that, the one-time framing develops. Initially, it is a low confidence environment. Neither the buyers are not serious nor sellers are not serious. But lately, the one-time framing is a clue to go in the direction of the one-time framing. Right?
Okay.
This is the fourth setup. The fifth setup will be like, multi-day breakout and reverse one-time framing. Go in the direction of the one-time framing again. This is also a mean reversion setup. And here we talked about multi-day low. Let's say letter A broken. A period started. A period broken 2-day low. A period broken 2-day low. And let's say B period also broken. B also broken. But lately C, D, E, F, you're seeing one-time framing getting developed. This is a sign that you're going to see a complete reversal. Again, this also has a mean reversion odds. This also has a mean reversion odds where the clues are the one-time framing. The clues are one-time framing. It also comes in the form of something like an A, B, and C period flip. It could also come in the form of an A, B, C flip initially. A, B, C flip initially. And lately, it could also one-time frame C and D and E and F would have been a one-time framed E and F. So again, these are the odds that you should not fade this mean reversion. You should go in line with the direction. Okay. So multi-day breakout and then a mean reversion coming in, or a low confidence and then a one-time framing coming in. All are continuation patterns. Yeah.
No, I'm just about to ask, like, this is just similar to the low confidence, one-timing low confidence setup,
Yes,
right?
yes. It is similar to one-time framing against no confidence.
Okay. Yeah.
In fact, it is nothing but a one-time framing in a bad confidence. One-time framing against bad confidence. That is also a sign of a continuation. But this case, it's a multi-day breakout and reverse one-time framing. It is also nothing but a bad confidence against one-time framing. But here, these kinds of multi-day breakouts usually happens only because of weak global cues, mostly. Weak global cues or weak IIP numbers or something like that. These kinds of information happens. But then, despite that, the one-time framing starts developing. That is a sign that we are dealing with a bad market condition. So you can expect the market to go and test day high or again previous day high. Or if there are any previous, let's say this one of the day we have a prominent point of control over here, you can expect a touch towards a prominent point of control. Or any stops are here. There is any back-to-back two stops are there. You can expect the stops to get hunted. So there are many such things you can anticipate based upon what previous day had done. Or if there are a lot of post structure in this day, which is repaired, you can expect a repair on that day. Your targets are mostly depends upon what kind of information is presented in front of you as at that junction. What are the weaker reference levels or any point of control or any uncleared intraday single prints. So those are the zones, most likely your target zones.
Okay.
And
so, and the entry point on the one-time framing. Yeah. So
the fourth
where
bar of the one-time framing, the fourth bar of the one-time, final bar of the one-time framing, which usually comes around 12:45 or 1 o'clock or 1:30. That is where you have to enter.
Okay.
Especially if it is a mean reversion pattern, that is where you'll be able to pinpointly, you'll be able to take a mean reversion from there.
Okay.
And the next setup is, we talked about multi-time frame, right? So this is the last one. one time framing against one time framing. So probably what you would have done, I'll take this example. This recent Bank Nifty is a clear example. It's called one time framing against one time framing. It came recently. One time framing against one time framing. In this day. Yeah, it is that day. It's the same day here. Maybe I'll do one thing. I'll go to indicators and disable the volume profile because I'm just disturbing here. Hide, apply. Okay. So here it is a high confidence open initially. It's a high confidence open where the price started trading above this one or the other one. Not this one. Maybe Nifty. Okay, anyways, I'm not able to spot recently, but I think we find one recently. I'm not sure about it. Let's say it's a high confidence markets. It is a high confidence markets and price is one time framing. Price is one time framing. Now, I'm sorry, it's not a high confidence markets. This is supposed to be low confidence markets. Let's say this is my previous day high and this is my previous day low. Previous day high and previous day low. And initially price shown a bad confidence. The price shown a bad confidence and activity was building against the bad confidence. Right? So in this case, we will be expecting a price to do we are seeing price doing one time framing. 4 bars started one time framing. I think that there are only 4 bars. The price is one time framing down, and the natural thing is we will be expecting price to go and touch the day high. This is our expectation, right? So this is our expectation over here. But then lately, how price instead of doing that, price has started one time framing like this. It's a one time framing against one time framing. It's one time framing down, followed by one time framing up against bad confidence. This usually involves testing of the day low. Instead of testing day high, you would have been initiated the trades over here. You'll be initiated a trade over here, but lately you see that 1 and 2 and 3 and 4 you'll be seeing one time framing, and again it's a one time framing against one time framing. Still the market is in a balance, so you have to think about cutting your positions here, putting positions over here. And if the market reverses, it reverses with the great odds and it goes and tests towards the previous day low. So it's like there is a bad confidence. One time framing develops on the other side, and again one time framing market goes against the one time framing. You can expect a test of a day low. That is a special condition which occurs very, very rarely, but yes, it does occur. So it's one time framing against one time framing. You should consider cutting your positions half, or you should consider taking a tighter stop loss. If in case if there is any reversal, it goes completely towards the other side of the trade. You'll be expecting a day high, but then day low will be tested. That is a special case in this scenario. Anybody not able to get this, what I'm trying to say?
Yeah, please explain once again.
let's say we have a previous day high and a previous day low. This is my previous day high and this is my previous day low. High and the previous day low. And one of the day we got an low seller confidence. Low seller confidence. Price was doing something, and activity started building over here. Point of control started building above previous day low. It is a bad seller confidence. Whenever against the seller confidence, one time framing is happening. Four letters are doing one time framing. This is let's say, let's name this as letter E. This is E, and this is letter F, and G and H. G and H. Okay, so already you can see that all our four are making higher highs, lower highs, and lower highs. Four lower highs in a row. But now letter G, H, I, and J market develops like this. So you would have been trying to take a long here. You'll be thinking that this point is a long point at the H period because all are one time frame. H period you would have been thinking about long. But you see when it is one time framing like this, it's I and J started building up higher. So now if you measure the lows will be like 1, G period low, H period low, I period low, and J period low. It started developing a higher high. It is like E of GH one time frame higher, GHIJ one time framed higher. So it is one time framing against one time framing on a low confidence environment. Price could do a mean reversion. You can expect a late sell off in the markets. It is double one time framing. One is against the low confidence, and another one is in line with the low confidence. That again you have to take a mean reversion over there. Market takes a mean reversion again. That's why we call it as a one time framing against one time framing. On a low confidence environment, it is a mean reversion. Right?
Low confidence environment of buyers or sellers?
Okay.
Low confidence environment of the sellers in this case.
Okay.
Initially, it's a low confidence environment of the sellers. Point of control develops, but still there will be a late sell-off happens because of one-time framing against one-time framing, and late sell-off happens despite low seller confidence at the open. Lately, the seller again started arriving here. So sellers initially would have been shown down, but middle of the day there will be one-time framing down. In that case, you'll expect price to go and test the day high. But while testing the day high, they again form one more one-time framing. That is one-time framing against one-time framing, where price goes and tests the day low again. The day low will be taken out.
So Rajendra, one question.
Yes.
So in these cases, would you monitor the order flow to check any momentum exhaustion, or it can play just purely on the price part alone?
You have to play purely on the price pattern alone. You cannot maybe let's say if this is low is a trap sellers or some other lows. It's not unsecured lows. In that case, you can anticipate a late correction here.
Okay.
Right, but that way order flow can help you. Otherwise, there are no other way you can expect order flow to show some information.
Okay. Yeah. Thanks.
Yeah. Any questions on this? With this one-time framing against one-time framing, all the 6 patterns come to an end. It's all these are total 6 patterns. Some of them are stronger auctions. Some of them are mean reversion auctions. So next comes the price balancing at the edges, expect a late spike. So it will be like how I can say that. Yeah. Let's just take the same example here. Clear it. So let's say price was doing something here, and it went on to high. It could be 1 day high or a 2 day high or a 3 day high. It could be any highs. But then again, it got a sell-off, again comes back, again got a sell-off, again comes back. Maybe we might be seeing multiple levels. Let's say letter J, letter K, and I are one more letter, and let's say letter M. And lately, you can expect some spike coming in. If you're seeing that price is trading at the edges of the balance, you can expect a spike. Or let's say the spike can also come something like this, like here, and again comes down, again it touches, again it comes down, again touches. 3 letters would have been traded, or at times 4 letters would have been traded, and that becomes a late spike. So the multiple times they would have been tested. Again, next time it's touching, they'll be breaking really fast. So once it happens in Nifty, this series, I'll show you. It was not a big spike, but it's a small little late spike. So here, you can see this kind of activity, letter F and I and J. The price was trading very close to close, and it was also trading very close to multi-day high. So this side was trading very close to this high. That particular day price was trading very close to this high. The letter F was just 1 tick shy, right? It was a weaker reference, and I came very close to F. J came very close to F. Price was trading at the edge of the balance, and also very close to the edge of the day high. So those are the signs that there could be a breakout coming in the later part of the day. I think I've seen similar example in ES Mini also. ES Mini. Okay, I don't want to change the charts now, but ES Mini I can show you later part of the time. Similar patterns we got recently. Okay, anyways, I'll close now and I'll show you in ES Mini.
Yeah, Rajan, one question here.
Yeah.
So here, the reference line that we have, the previous day high, or the recent high, whichever that we have marked there, right?
Yes.
The price is trading below that. So does that indicate a low confidence? Should we interpret it that way? Or
it is a low confidence because point of control is low confidence alone. You're not your trading opportunity, right? First, you have to keep that in memory. Low confidence alone is not your trading opportunity. Low confidence is saying that the point of control is still not willing to accept above the key reference level.
Correct.
Right, but that doesn't mean like lately there could not be a short covering rally or not. A low confidence could be a trading opportunity only if, let's say, there is a lot of activities happening, and middle of the day you're expecting some spike above that, and it's becoming a low confidence. In that case, you can expect a mean reversion.
Okay.
Right, but here look into the structure also. Letter F goes exactly to the multi-day high, which is also a last week high. It's a previous week high. Selling came exactly 1 tick below the previous week high. You know that it's a low confidence activity was developing over here, but that day's high, intraday high, is a weaker high. Intraday high is a weaker high.
Okay.
And again, price came 2 ticks very close to the previous week high. One more time they came. All are getting sold off. That is a sign that, maybe at F period you may, it is just only one information, but at I period and J period, it's coming again and again and again, and which is very close to the previous week high. Many weaker sellers are coming and appearing very close to the previous week high. It's intraday. Most of them are the intraday players or trading money. Most are weaker hand players. So in that case, you can expect a price. If at all the price is trading at the balance of the edges, or price of the very close to the previous week high, multiple times you're getting a rejection, price is trading at the balance, you can expect a late spike in the later part of the day.
Okay. Okay.
Maybe I'll try to show you the similar thing which occurred in US markets as well, in ES Mini. I'll show you the same examples.
Hello?
Yes. Yeah, please go ahead. Let me connect to US markets. Chart. So ES. Yes, maybe. Not stay. Yeah, here. You can see that price is coming like this, E and F and G. If it is coming multiple setup and it's gonna break, it results in these kinds of patterns. Which, if it is in 3 or more patterns, is gonna break. That could bring some bigger activity over here. Especially if it's gonna happen very close to the day high. That is what I'll say. Like it's gonna break really fast. When it breaks, it breaks really harder there. So that information we call that as an price balancing at the edges, expecting late spike. Next thing we already talked about is G2 and G3 patterns enough, so I'm not going to discuss further. So these are mostly 70% of the trades are intraday trades, which has to be combined with the sentimental divergence, the sentimental indicators. I request you to look into the G2 and G3 patterns, which one to fade, which one not to fade. Just go through the previous videos, because if I'm going to take again G2, G3 again, it's going to take another 1 hour from here. This also we talked about it, the poor low and a weaker low combinations. This is again an intraday arts. Next comes the halfback plus some other intraday information. Right? So this is also we talked about it. This is also we talked about, and all these things are subset of here multiple weaker intraday references. Right? All these belongs to the part of this. 1 and 2. We already discussed all those setups. Where multiple weaker intraday reference comes, it can be in the form of an halfback, or it can be come in the form of an weaker references, or combination of weaker and poor references, or in the form of an previous day high, previous day low. Exactly, price comes and touches exactly at the day's open. Today's halfback. If you are seeing multiple combinations of this, then you can expect a and price is plunging down below the value area low. Again, that is again another key. Price plunges below the value area low or high. Price shoots above value area high or low, then expect mean reversion. Reversion with greater odds. It's because more and more you're dealing with intraday players here. So those are indications that more you're dealing with the intraday players. This is not an intraday strategy. This is again price coming and touching exactly at the prominent point of control and bounce back. It is a weaker reference, right? So these are reference has an odds of clearing in a very short term, mostly intraday. Mostly it gets cleared intraday. If not, expect in a very short term. So, for example, I'm going to show you a couple of information from HDFC Bank and other S Bank charts. Such kind of setups happened. I'm going to show you all those things. First, we'll take the HDFC Bank. This is 10 and 11 here. So This we already talked about this in the other section. This is also nothing but a subset of here. This is also we talked about this, about the rejection at the double distribution reference level or a spike reference level or a P shape or a B shape. So this is the last one to discuss. So let's look into the S bank. S bank, if you remember, we got a ABC elongation with an outside bar, right? So this is a strong auction, right? You're getting this particular day's point, what we talked about it, 17th Jan. Price opens higher, it reverses, it reverses, it reverses completely. This is what kind of auction? This is a stronger auction. This is a stronger auction, right? So it's what ABC outside bar. It's an ABC outside bar. So whichever the direction of ABC outside bar, you continue in the direction of the outside bar. That's why I said, like, don't try to fade this. Don't try to take a mean longs here because it is vulnerable. Most likely it is a rejection, and moreover it is a open drive, open rejection reverse. So this we call that a what? It's a strong open rejection reverse. It's a strong open rejection reverse. So don't try to fade it. But yesterday's information, look into the yesterday's information. Yesterday's information also, it was a good downtrend initially. A and B got a sell-off, but lately, look at the letter A period. The A period was exactly 1 point, just 1 point. This is 10 paise difference. 10 paise difference from the previous point of control. The point of control and the day high, just only 1 tick difference, just only 10 paise difference. And it got a sell-off. It got a sell-off. It got a sell-off, and it closed around 199.05. But then this point of control is a weaker reference. In a very, very short term, you can expect one more test to happen at those levels, right? So, but still, so far it's a stronger rejection. Maybe from here again we got back into the balance. We can expect one more sell-off. That is always possible. Because so far this rejection is a strong rejection. Means price going above and then sustaining here, it's going to be very challenging. This level is a strong resistance level now. This is a strong resistance level. 2 ticks, price went 2 ticks from there, and there was a serious rejection, and then there was a continuation. But then the point of control was not a point of control, is very mechanical, just 1 tick. So if you are shorting here, you need to take a hedge or something like that. So you have to prefer hedging over here. And maybe one price started, or you can think about writing at the money calls, something like a 200 calls. You can think about writing 200 calls. Once price is doing something else, again coming back and clearing those point of control, and again coming back to 200, you can consider removing your hedge, right? So that is how you can able to protect your capital. So let's say instead, if the price goes up and it keeps on going up, still you have upper cushion till 210 levels. So one of the place you have to hedge your positional charts. If at all you are carry forwarding a positional chart, you can hedge it over here, or because these levels can be revisited anytime in another 2 or 3 trading sessions, you can expect again price to come back and test these levels. Right? So so you need to have a compulsion to protect your positions there. Maybe I'll show you similar setups how it happened in HDFC Bank and how it got cleared. So one of the day here in HDFC, start of the January. Start of the January 3rd day was a prominent point of control. Think about the 4th day. The 4th day price was just 1 tick shy of the point of control. It's a prominent point of control. We don't look into point of control, but if the price is coming and touching exactly 1 tick above the prominent point of control, it's a weaker reference. price has the odds of revisiting in a short term. Usually it gets cleared in the same day itself. That particular day it turns into a 45-degree line. And the very next day they survived, but lately they come back and clear those references. So these are the zones are most likely to get revisited in a short term. Usually the very next day or 2 day maximum, it goes for 1 or 2 up to 3 trading days. So it doesn't take much time, but usually it clears faster. When I say faster, it is less than 3 trading days. So you can expect price to revisit back. You can expect less than T plus 3. I never seen anything extended beyond T plus 3. Usually it gets cleared in T plus 3 itself. So again, that means yes, bank is not going to move up, going down faster. Even if they go down a little bit, they 1 or 2 days, you can expect price to come back again, clear 204 levels. Most of the time, what happens intraday itself, most of the time, they touch prominent point of control, they go down, but they will clear intraday itself. Most of the prominent point of control touch or gets cleared intraday itself. If at all it is not getting touched, it will be still a reference. That prominent point of control will be carry forwarded, but it has the higher odds of testing in a very faster way. Right? So I guess so far we have covered all the intraday trading setups. If at all anything which is coming into my mind, let me put it out. But here we discussed 7 patterns from the ABC continuation alone, and 2 setups from look above the balance and fail. Total 9 setups. And here we covered almost 11 setups. Inside that 11 setups, we have more clustering here, more classifications. And again, more classifications on multiple weaker references and more classical references on 4-day balance. So total, at least close to close, we would have been covered some 25 setups, 25 intraday setups. You don't need to master everything, but try to, but this will give you an odd to trade any kind of market conditions, right? So these rules are classified to trade any kind of market situations. I know it's going to be very heavy for you today. Slowly you have to, you cannot master everything, but try to master at least a few setups which will help you to understand. All these will improve your market understanding first of all these trade setups will help you to not to trade, take a wrong decisions again. Some of them are very good positional opportunities, some of them are very good intraday opportunities, some of them gives maximum intraday trading opportunities. Even if you are able to master only the ABC reversals, that itself, it's gonna help you most of the time in taking right decisions. Right. So again, I'll share you this documentation as well. Let me save this. Save as.
So there are 2 documents, right?
There are total 2 documents. One I sent. This is the second one. This is part 2. If possible, I'll try to add examples to each and everything, and then we'll take it in the community webinar. Right. So maybe this time we've only shown you with the drawings.
Yes, sir. That would be great.
Maybe,
if you have any slides or something like that, please share with us.
Maybe in the community webinar, once I collected all the proper information. As of now, information is here and there. Once we done a proper PPT, we'll put a community webinar and then we'll rediscuss these points again.
Yeah, you're sharing this document right now?
Yes, I'm going to share once the session is going to, maybe I'll share you right now.
Okay. I mean, after the session only.
Yeah, I'm going to do that.
You shared both, part 1 and
part 1 I already shared. Part 2 now you'll be receiving once the session is over.
Okay. So Rajendran, I have one more doubt.
Yes.
So regarding the one-time framing. Yeah, if we are confident enough on one time, can we go ahead? No, I mean, recording on the based on conditions of the strength.
Yes. Okay, go ahead.
For example, if you open the Friday chart, I mean Friday Nifty chart.
Friday Nifty charts, okay.
I mean, actually, it opened a low confidence, no?
It is a low confidence buying.
Yes, actually,
They took a 2-day high with a tick and then they got back in. Activity started developing lower. It is a low confidence buying. But at the same time, think it was ABC elongation also. So
there.
it ends there. It ends there itself.
Yes, and after that, if you see, I mean, there are 5 ABC. I mean, 5 OTFs are there one time framing from C period.
Hmm.
So if it is, I mean, as it's a low confidence market, I mean, can we fade it at the last one? I mean, after the pink one.
You're talking about this one time framing, right?
Yes, this one time framing.
This one time framing, it doesn't has any meaning. We will be in a low confidence environment. We will fade only if the one time framing happening in the reverse direction. In that case, we will try to fade. We'll expect a day low.
Sorry, I didn't understand.
So it is a low confidence selling, right? It's a low confidence selling.
Okay.
So low confidence selling, and the one time framing is happening against low confidence. Then only we'll expect the price to come down and test the day low. But we don't have any such patterns that one time framing happened for 4 continuous bars. So there are no such patterns.
What about C period? I mean, C, D, E, F.
C, D, E, F.
In the 21st Jan, C, D, E, F. That's the one.
C and
Sorry, D, E, F, G. Sorry, D, E, F, G.
that is one time framing down, right? So we
Yeah,
are
that's
one
what I'm
time
saying.
framing against the confidence. This doesn't has any meaning. This doesn't has any meaning to that.
I mean, why it was not having meaning? I mean, because it's selling low selling confidence. That's it.
It's a low confidence selling, and then E, F, and G, nothing means to us. You have to trade only if you are seeing in one time framing against low confidence, and you are seeing a reversal one time framing. So it goes to the point number. So markets are showing bad confidence, and one time framing is happening against the bad confidence direction. Then only you have to go in the direction of the one time framing. Where is the reverse direction? It's only for high confidence. Markets are not showing any confidence, so it's not in the rule book here. It's not part of the rule book. So this has nothing to do with that. You have to leave it, go away. Nothing to do with that.
Okay, then. Okay. I mean, how to identify these kind of OTFs to get rid of?
It should match the rule book. None of the things are in the rule book. You should let it go away.
So I mean, it is sorry, it is like low selling confidence.
Yeah.
And OTF is also
One time framing is down.
okay.
Nothing much. It's not in the part of the rule book.
Okay.
It doesn't mean anything to me. It's not a trade setup at all.
Okay.
See, one time framing, it's happening in the direction of the OTF. It's not a trade setup at all in a low confidence environment. So it's not a trade setup. But if it is happening in the high confidence setup, it is a higher conviction.
But as per the rule,
High confidence selling is happening. One time framing also happening on the sell side. That is a high confidence markets.
oh yeah, in the rule book we have like if it is low confidence and OTF is
Its OTF is against the let's say this is one time framing low confidence selling. So selling direction is on the downside, and it's a low confidence selling. Okay, low confidence selling, and let's say lately the one time framing starts developing. What the rule book says is that go in the direction of the one time framing against the low confidence. That's what the rule book says. But what happened on Friday is it happened like this. It's a low confidence selling, and lately one time framing was happening like this. This is not in my rule book. This doesn't mean anything to me.
okay. So
So first initially just go with the rule book. Just take a reference from the rule book. Whenever one time framing is happening, check which one is matching. Accordingly, you go with that. Over a period of time, you will get familiarized with these concepts. All these setups happens after 1 o'clock or 12:45, and it happens before 2:30. So anything which is happening lately after 3 o'clock or 2:30, we don't take any reversal here. So all these one-time framing will be watching
After 2:30 only. This one.
after 12:40. After maybe after 11, anywhere to 11 to 2 o'clock to be on the safer side. 11 to 2 p.m. is what you can expect these kinds of patterns to arrive. And then you can use this to fade. Right. Okay. Anyways, coming back again. We'll take a small break here and 15-minute break, and then we'll come back and discuss about the market profile scanners and the market profile features of Bell Market Profile Pro Ultimate. And maybe the top setups we will take it next session, next week or some other week. One more week. We have 2 more weeks to discuss. So one more week we'll try to postpone those final possible market top setups. We'll take a small break, and another half an hour is enough to discuss about the features of Bell Ultimate and the features of the market profile scanners, how to set up market profile scanners. That's what we are going to look into it, right?
Sir, any view on open auction trades, sir?
Open auction trades. So the open auction, open drive, open test drive, everything has been superseded with the the way we look into the market confidence. What do you mean by open auction setups?
Sir, so 9:15, so just 9:15 to 9:20, we
Yes.
can take trades, that kind of scenario, sir. In the early morning, in that itself, when market opens,
Yes.
that kind of scenario, anything can be done.
See, one way to identify open drive is, you cannot identify which day is an open drive or not, but let's say, think about this 15th January. 15th January, if you want to catch, if you want to monitor, let's say you want to onboard at the opening itself,
Right,
then
sir?
there is only one easy clue is there. Just go to your 1-minute chart, first of all, right? So go to your 1-minute chart. If you think that you're seeing a certain pattern, let me go to the 15-minute or 15th January 1-minute chart. Let's say 15th January 1-minute chart. So 15th January 1-minute chart. So what happened on 15th January? It is a drive. The 1-minute chart itself, you watch it. So it took a drive there. At that point, you never know whether it's a drive or not, but it took a drive, and then price was trading inside that letter A and B, or it took a drive and price A and B and C. Sorry, it's not A and B and C. It's a 1-minute chart. If you are seeing this kind of patterns, or if you are seeing that first 3 candles are moving like this, so these are the signs that these are the indication that that day could possibly get into a open drive day. So, but then that first 3 minutes itself, you have to take a stop, and then you have to go with the trade. First 3 candles is what you can use this to identify. You can monitor it. Something is going wrong, you have to get out of it. Otherwise, you're going to get the bottommost day over there. One thing is that first minute is an open drive. First minute itself, it's a drive. It's a drive, and then a drive again, or at times it was a bigger drive, and then an inside bar, and then inside bar. These two will be an inside bar to the first open drive, or it will be like inside, and then it breaks out something. So it can be any kind of these kind of patterns. The thing is, first letter A should be pretty precisely good with a very good volume. Volume should be relatively good over here. In that case, you can consider going long in the direction of the first 3 minutes. You can take the confirmation there, but it should not be like something like this, again like this. This cannot be open drive. This may or may not be an open drive. But if you are seeing these kinds of patterns, that gives you some early confirmation that it could be an open drive. Most of the P-shaped profile happens like this. Most of the trending day with an open drive, it happens like this. Maybe I'll show you one more open drive setups, how it formed. Let's take an examples on, think about this, 28th December. 28th December, it was an open drive, right? It's a clear, it turned out to be a P-shaped profile. So first 3 minutes, it's a subtle clue over there. Let me go to 28th December. 28th December.
Sir, you take open option trade, sir?
Not every time.
Okay. So you see 1 minute chart, right, sir? When you are taking
Yes.
open option trades.
Yes, it will be like the first 3 minutes is where the confirmation to say that it's a high confidence market or a low confidence markets. You're seeing this kind of patterns here. So 1 and 2 and 3. The first 1 minute chart itself, it gives you where to keep a stop loss. If you're seeing this pattern, don't wait for any other further confirmation. Take a trade and monitor. Right?
Right, sir.
Yeah.
Thank you.
Yeah, we'll take a small break and we'll again get back by 4:35. p.m. And then we'll discuss about the rest of the other topics. Right. So until then, I'll be on mute. So let's quickly get into the scanners. Right. First of all, before getting into the scanners, let's try to understand what are the properties of Bell Profile Ultimate, Bell Market Profile Ultimate, and what are the features which are supported by Bell Market Profile Ultimate. So there are two kinds of volume profile you can see in both in AMI Broker as well, both in the Bell Market Profile Basic version as well as Ultimate Edition. You'll be mostly seeing two volume profile structure here. So one of the volume profile structure here, let me go to the latest one. So here is the latest one. So this is a volume profile. We call this as a relative volume profile. And the other volume profile, this is one more volume profile. It's something like an order flow kind of volume profile, right? So if you want to test this volume profile, first of all, there is one more unique setting has to be done. You have to right click over the charts and go to indicators. And get the relative volume done at, make sure that it is done on calculate on each tick, right? If you setting calculation on each tick, then possibly you'll be getting the volume as close as the same order flow volume. Will be as closely matching with your order flow volumes. It gives you bifurcation about how many buyers, how many sellers at each and every price levels. These are the actual traded quantities at those trade locations. Like at that price level, really this many number of contracts got traded over here, and there are this many number of buyers and so many number of sellers are here. This is only for that particular recent day. So at that particular recent day, you'll be able to get the details. And whatever is shown over here, they're not actual numbers. They are just relative numbers. But what are the numbers which are shown over here? They are actual traded quantities, right? So this is only to get a justification where the activity is high and where the activity is low. So this is a relative volume and this is absolute volume. This is absolute volume in the sense actually traded volume. Actual traded volume. Relative volume, you may get some numbers here, but that number is not a true number, but that is only a relative measure relative to the previous day or current day. It gives some number to check where the activity is higher. You can use relative number only to check where the activity is higher or where the activity is lower. That is the only thing you can check around over there. But you cannot say like this place 500 lots got traded over here. You cannot say like that. But from the charts over from the absolute volume, you can say like at that particular TPO size, how many lots got traded and how many of them are buyers and how many of them are sellers. You will be able to say that. And this is nothing but an order flow charts. Nothing but an order flow charts. Oh, it's a daily profile, bifurcation of buyers and sellers only on the daily time frame perspective. And but you have to ensure that you right click and go to indicators and make sure that you are selecting the time frame as tick. Select the, by default it could be showing as a 1 minute if you are directly applying to the charts. Make sure that it is on I think I haven't set it up right. So where is the settings? Yeah, here it should be tick. So maybe if you're going to set it as a tick, you will get the actual absolute volume. It's going to take a lot of data. It's just in calculation mode. It takes a lot of time to load because it uses tick level to compute the order flow charts. So you have to change the minute bars to tick level.
Is this available on Ultimate Pro?
The basic version is available. Right now what I'm using is Ultimate, but it is available on the basic version also. Okay. Now the distribution, whatever you are seeing, it's the actual traded volume at each and every price level, right? So means some 20,095 contracts, 20,025 contracts got traded over here. So if you divide it by 75, probably if you look in the order flow will also show the more or less the same information. 27 contracts got traded at the day high, right? So that's the thing you can try to interpret from it. This is 27 contracts at the day high. 2025 divided by 25 is 27 contracts. So this is in order to get this, you need to right click and go to indicators and you have to enable that settings. Otherwise it will show you some values, but that is not a true values. If you want to get the true values, you have to set this. For that you need tick level charts. So where it was. Yeah, here. The data collection type. By default it will be in the minute. You should make it as tick. Right? So that it will be able to bifurcate the bid and ask data points, and then it will be able to show you that order flow information at that only for that particular day. So at least you will be able to see whether the day low is secured or not secured based on the quantity got traded, whether any stuck buyer or seller is there at the day high or day low. You'll be able to come to know about it even without order flow charts, right? So that is one information. The second information is it comes with many reference levels. So let me go by all these setups one by one. So lot size, you'll be able to bifurcate those lot size. Maybe if I say 75 and if I apply, it divides the lot size and gives me the 27 contracts at the day's top. TPO size, you know about it. So we have a specific rule how to set the TPO size. I prefer always optimal TPO size because I follow Jim Dalton's principles, which requires visual reference to be monitored. So we go with the TPO size there. Okay, so I set the lot size as 75. So now I'll be able to track the lot size got traded at the day high. So the day high lot size is 27 lots got traded at the day high. So at that price level, right? So at this price level, from the candlestick charts, you will not be able to derive, because only at this price level, how many lots got traded? At this price level, A, J, M, collectively at that price level, how many got traded? Out of that, how many are buyers, how many are sellers? I should be able to classify it, and where the and where exactly the point of control got built, volume point of control. This is a place where the volume point of control got filled, where maximum volume happened in this location. Maximum volume happened in this location. So they call it as a high volume node. This volume is high volume node. And the volume where the lowest volume happened for the day, they call it as a low volume node, or LVN. They call it as LVN or HVN. There are people use some HVN and LVN strategies. I don't look into HVN or LVN. So, but yes, it's good to know. To me, it is a one concept good to know. It's HVN means high volume node, and low volume means LVN means low volume node. LVN is it's usually happens because these are the zones low liquidity happen. There are no liquidity providers in this band. That's what. Whereas high volume node is where more people come for participation, more liquidity happens over here. So these are the zones, good liquidity zones. Good liquidity zones often results in a good business. More people transact information over there. More contracts get traded over here. But this is a low volume node, low liquidity zone. So market moved from a low liquidity zone to high liquidity zone. That's what I said. Like market always move from low liquid zone to high liquid zone. It finds a liquidity. A lot of transaction happens because more people are willing to come and trade over there at that trade locations. That is the interest zone for the day. Market achieves this equilibrium. Market forms a point of control. And I don't even use the terminologies like virgin point of control. We mostly tend to follow Jim Dalton's principles. We mostly use prominent point of control. Right? The people I had seen people use the prominent point of control. They don't look into virgin point of control, and the people who use virgin point of control, they don't use the terminology prominent point of control. But both are different concepts. We use prominent point of control because it gives context. It gives context, meaning more the prominent the point of control it is, more activity is going to trade, more number of TPOs got traded, more than 10, 11 or 12, more it is going to be very prominent, higher the odds that it is controlled by the short-term players. Again, you can ask me what is virgin point of control. Right? Virgin point of control is nothing but an untested POC. Let's say there is one point of control over here. It is just a POC, it's not a PPOC or anything, but just a point of control. But this level not tested, this level not tested, price is going up. In a good uptrend, what happens? The point of control will not be get tested. If they are seeing for 4-5 in a row and then next day price opens, they'll expect some one of the prominent point of control to get tested. Not necessarily all of them are point of control. They're just a point of control. They are not a prominent point of control, but they are uncleared point of control. If they see 4 or 5, then they started taking a mean reversion trades, but they don't have any context involved over there. They're just trying on the mean reversion bets. It may succeed or it may not succeed, right? So that is how a virgin point of control is. I feel it doesn't have any clear context about the market participants.
Sir, PPOC, PPOC and VPOC are same, sir?
So VPOC has two different meanings. Some what they are asked. Some people say VPOC is volume point of control. Some people say VPOC as a virgin point of control. So let's say this is point of control. This is point of control. Just a point of control, not a prominent point of control, but just some 6 activity got traded over there, or 7 trading activity got traded over there at the point of control. But still it is not untested. They call it as a virgin point of control. But I don't use virgin point of control nor LVN, HVN kind of concepts. Right? So if the VPOC got tested, then they say like virgin point of control got tested. Those people use virgin point of control was one of the target destination points. But we don't use that. We don't take references from virgin point of control. Right? So in the markets, different market profile players use different way. They have different terminologies. And so I prefer to follow more of a Jim Dalton principle as the core principles here. Jim Dalton doesn't use his volume point of control, neither virgin point of control. So coming back to the topics, so we learned how to set this actual volume. We also learned what is the difference between actual volume and relative volume, right? So relative volumes is just only to measure where the low liquidity activity is happening, where high trading activity is happening, but all these are in terms of relative numbers. They are not actual traded volumes. What you're seeing on the left hand side is the actual traded volume from the order flow, right? It's a real traded volume. When the volume says 24, actually 24 lots got traded over here. When the volume at the day low says 5 lots got traded over here, actually 5 lots got traded over here. It also gives you bifurcation where whether the buyers, it is done by the buyer activity or a seller activity. That you will be able to gauge from that. This is nothing but part of market profile. I mean, this is a part of order flow charts. And the second thing is the reference level, automated reference levels. So what are the automated reference levels available? Let me go to indicators. And let's say the automated reference levels available are, one is an ORR, one is an ORR, open rejection reverse. So let me list it out. One is ORR, open rejection reverse. If there is any ORR, it captures and lists it out. But at the same time, you have to aware that whether it will not classify whether it's a strong ORR or a weak ORR. That you have to do a manual classification. At times, the ORR could be strong ORR. At times, an ORR could be weaker ORR, based upon where the ORR is happening and how the point of control activity is shifting. So based on that, a ORR has to be decided, right? So, but it just wherever it finds a ORR, it plots a reference line there. It also plots. It gives a classification ORR top or ORR bottom. It gives that kind of classification. Next comes the double distribution reference or a triple distribution reference level, right? So the I haven't enabled it because many places it shows the stop. If I want to enable it, say apply. I'm going to do something here. I'm going to remove the thing to data collection type to minute because I'm already using order flow. And otherwise, if every time I want to apply something, it's going to take a lot of time in terms of calculation. Yeah. So now, now we can see wherever you're seeing a matching tails. Wherever you're seeing a matching tails, it gives you. So there are two tails matching. So those tail matching zones, even if one tick is going to match, it says like it's a double mechanical reference. Some stops built down below that. If you're seeing a double mechanical reference, when the price is approaching, you can expect some quicker move to come down there. So again, there is one more double mechanical reference over here. Watch this tail and this tail. It's a double mechanical reference. Some stops are there, which is going to expect to get hunted at the Monday morning. And in fact, this is also one more double mechanical reference level. And there is a one more ORR is there. So Monday, last Friday activity is an ORR. Price opens gap up above previous day high. Quickly got back into the range, but it is a weak ORR. This ORR is what? It's a weak ORR, means stops are there. Again, so stops are in the form of tails. Stops are in the form of an ORR. So which says like more stops are sitting in this band. This band is most likely to be hunted faster. So market has the odds of taking it down lately. Next, what happens, it matters. So it gives you stops in the form of double distribution or triple mechanical reference. Double or triple mechanical reference, and which is nothing but stops built around that levels. So we've seen ORR top and double mechanical reference. It also provides failed auction. and G2, G3, G2, G3, both high and lows, high and lows. But by default, if you see the number, the look back period, it will not draw for all the reference lines. If I right click and go to indicators, by default, you will be seeing the value of 10, 10, 10, 10, 10, it gets filled over there. That means those reference line which is not cleared in the last 10 days, only it will list those lines. If, for example, I want to check an ORR, if there is any weak ORR in the last 30 days, I want to have a check. And I want to say like, get me all the G2, G3, which happened in the last 40, 50 trading days, which are not cleared. So if I going to put that, you'll be able to see a back-to-back G2 high. Again, which is what we are also talking about. This is one G2 high and one more G2 high. I think it's supposed to be here. There's one more G2 high here, right? So there are two back-to-back G2 high. That is why I said like this high is going to get clear. This is not a top at all. So this series we can expect these two back-to-back G2 high. A back-to-back G2 high, back-to-back G3 high, they are not secured highs at all. So often market goes and gets it, and then maybe something different could happen. So Monday could be a wild day. Let's see what happens on Monday. And so a back-to-back G2 high is not a secure high. At least I'm expecting this to get clear, even if this G2 high, whether it clears on Monday or not, but at least I'm expecting this to clear and then come back. It may expect this to clear, and worst case, it can go up to this and clear. Price getting back into the range is it's a weaker reference level, having the higher odds of shorting. And it could form, moreover, it could form a top also. So maximum reference level I'm watching on the upper side is 11,010. That is my expectation for the series as well. And till today, the Jan 1 high is not tested. So if at all they are going to break this G2 high, the weak high, if at all they're going to break this G2 high, the Jan 1 high would have been tested, right? So that is what right from the start of the series we are striving for. It is coming, but it's going to come in a slow and steady phase. And that G2 high, G2 low, we give more preference to this. We just look for an two reasons we look for. One is an intraday setup, intraday setups, which has to be combined with the trading sentiment indicator, Second thing what we'll be looking is uncleared G2 or G3 back to back, which is coming at an a major swing high or a swing low, to check whether it is a to check whether it is a secured high or not. Mostly if it's coming in two back-to-back coming in, three back-to-back G2 or three back-to-back G3 coming in a row, they are not an secure high. Usually it's meant for clearing those reference level. So they are not secure high at all. So especially uncleared back-to-back. Uncleared back-to-back G2 high or a G3 high, they're not a secure high at all. So now we are in the process of clearing, even let it be in Nifty or let it be in US markets, they are in the process of clearing the back-to-back G2 high in case of Nifty and back-to-back G3 high in ES Mini. So we use that. That is why I put higher length. Even I just want to check last 30-40 days to check are there any back-to-backs G3 high or back-to-back G3 high. So after that, next to G2, G3 high, we have one more reference level, prominent point of control, poor high, poor low, AB poor high, AB poor low. Let me list it down. So this is one reference level, ORR. Second one is double mechanical reference. And third one is failed auction. So you don't need to plot all those things on day-to-day basis. Automatically, it comes on your screen. The fourth one is G2, G3 high. One is gaps, they have a reference here. If there are any gaps, automatically it draws and shows the gaps. But I, as of now, disable gaps because already I'm having too much of reference line. And sixth one is a prominent point of control. Prominent POC, if there are any prominent point of control, which is very critical to me. So I always keep prominent point of control in my screen. And seventh one is weekly high, weekly low. Automatically it draws a line at weekly high or weekly low, which I don't use gaps and weekly high, weekly low as of now. Rest everything I prefer using it. And the last one is AB poor low, which is a very very special kind of poor low or poor high, which has a higher odds of clearance. And the ninth one is poor low, poor high alone, poor low or poor high alone. So these 9 features you'll be able to get from the as a reference level, and you'll be able to control the length of those references. The length of those references. If you don't want, let's say I don't want failed auction, you can simply turn off by unchecking those things. Or even if you want to select the text color, you can select a different text kind of text color over here. So that is why you'll be able to get it. In fact, even if you want to put a volume alert, if the volume is crossing a certain number, you can it automatically sends an alert. So you can have a volume alert tool as well. And what else is there? We talked about this miscellaneous data box. There is one more data box is there. If I want to enable it, automatically it shows as a table over here. What is the point of control? Maybe, yeah, what is the point of control? What is the value area for the day? Where is the value area low for the day? Where the point of control is getting built? I just have to simply hover my mouse over that levels. I don't use it because I don't use all those stuff. I prefer to switch it off. I personally don't use those things. And if in case if you don't want the left volume area, you can disable those left volume area. And disable show, disable everything from here. All these things will be disabled from the list. I don't want to have a data box. Apply. Okay, so anyways, it's good to have those stuff already. And the other settings are, here comes the major settings, sessions. Sessions is a major setting here, right? So as of now, we are in a daily profile. Let's say I want to split the day into 2 profiles. I want to split the day into 2 profiles. I'll say like, I'll go to minute and say every 3.5 hours, give me one profile. So we have in our regular market session, we have from 9:15 to 3.5. That is closely 7 hours 15 minutes is the thing which we have every day. Let's we say like every 3.5 hours I want to draw a profile. 3.5 hours is something like 180 plus 30, 210 minutes. So every 210 minutes you draw me a profile. So then in that case, it draws me a profile. In a day, I'll get 2 profiles in a day. In a day, I'm going to get 2 profiles in a day. But let's say if you want to study a monthly profile, you can study monthly profile and say 1. Entire month, you will get only 1 profile. Entire month, you'll be getting a monthly profile here. This is monthly profiles. This monthly profile you can use, especially if you're using a daily chart. If you're using a daily chart, then on the monthly chart, on the daily chart, it plots a monthly profile. On the daily chart, you'll try to plot the monthly profile. So you can do the same level of distribution, same level of study, same confidence level. The only thing is that instead of 30-minute charts, we are using a daily time frame to plot the monthly profile, structure. How this month got distributed, you'll be able to get a fair idea in this case. This month activity. The entire month activity is listed down as a split profile. So here is the split profile. This entire activity is a split profile for the current month. And here is the current month activity in a balanced format. So you can see where the point of control has been formed. So far, 10,850 is where the maximum activity formed. Higher level consolidation. So that is going to be the key support level. Any serious downside has to come. Price has to break 10,850 to break down for any serious downtrend. Okay.
Sir, show me weekly profile also, sir.
Yeah, it's pretty easy to do that. Instead of monthly, you have to right click, and for a weekly profile, what you have to do is that you have to go to 30-minute charts first of all. Go to 30-minute or whatever the time frame, and right click, go to the indicators, convert from monthly profile to weekly profile. But do I use weekly profile? I stopped using it. I was once using it, but once I clarified with Jim in Bangkok, so I don't use weekly profiles anymore. This is last week's trading activity. The entire week we'll be getting one profile here. Right, so this is what entire week we will be having a profile. Kind of a double distribution is what it formed in the last week, and it's balancing again. It is a lot of activity. The entire activity has been clustered, and then it's shown in the form of a weekly profile. So according to your requirement, if you are an MCX user, if you want to trade MCX, maybe you have to split the markets into 3 sessions. One is the Asian session, European session, and US session. Or probably you can say like you can use US session as an real-time markets, because if it is crude, we generally follow NYMEX crude, right? So if you are following natural gas, again we follow NYMEX natural gas trading activity. Price closely follows, because the cash settlement is done in crude and natural gas based on the NYMEX settlement price. So we track closely NYMEX crude oil and NYMEX natural gas. So we can take the actual market, whichever is happening in the day session. It's a overnight market session for US markets. So overnight markets weaker hand plays, and stronger hands plays only in the regular market hours. So 6 to 11:30 is where the interesting trading activity happened. That's what we have to consider as a real-time market. So you can split into 2 profiles. First, morning 9 o'clock to evening 6 o'clock as a overnight markets, and remainder of the session as a regular markets. That in that way you can split it, or you can also split into 3 profiles. One in the Asian session, second one in the European session, third one is the US session. You can also split into 3 profile sections. Either way you can trade, but a longer hour markets has to be split into overnight markets and the regular market hours, right? Yeah.
It's going to be in a single chart, but it's going to plot 3 profiles, right?
Yeah, 3 profiles, yes.
But how can we choose different market hours for each and everyone?
That feature is not there in NinjaTrader.
Okay.
So only one time frame it says, because if you right click and go to data series, it supports only one time scale. So only one trading hours you can specify.
Then for the MCX, we can't plot it properly, right?
That is why you have to use this setups. Right click and then you have to go to indicators. Here you have to set up like this. The session value, how many sessions you want, how many profiles you want. Daily, I want only one profile. Or if you have minute, how many minutes once you want a profile. So 2 10 minutes, every 2 10 minutes you plot a profile. Or let's say 2 10 minutes you plot a profile, not every 30 minutes, but every 15 minutes you get me a letter. In that case, you will be getting A to L if you are separating into 2 sessions.
Okay, but what if I plot just a single profile for all?
In that case, daily, and then you have to make it as one the entire day. It will be plotted. The letters will be generated every 30 minutes once. So, but still, even if you put 15, you will get more letters, but the distribution will remain the same. Let's say I'll apply this. It's a 15. Instead of A to M, I'll be getting more number of letters, but the distribution for that day it remains the same. It's the same distribution levels, right? So, but it's always a good practice to use the standard setup, because that will skew the calculation of the prominent point of control. That will, even a 5 prominent point of control there here, that will result in 10 prominent point of control there. So it's better to keep us 30 as the default setup. Initial balance, first 2 in the sense letter A and B period, it will consider as an initial balance. Open range length, it will be looking into first 10 minutes of trading activity.
But plotting one single profile for a long market is that okay, right?
No, it's not okay. It's not okay.
It's not okay.
For long markets, you'll be getting too much of information. In a US markets, there are 2 kinds of sessions are there. One is overnight session, and another one is the regular market session. Right? So in the overnight markets, typically the only trading money will be there. Institutions, they don't like to participate because they don't get the liquidity over there. So the liquidity will be hardly 25%. Only they'll be get only 25% liquidity there, whereas they get more and more liquidity in the regular market session. Institutions' presence will be there, but it will be very, very minimal. So most of the time, the dominance will be taken care by the short-term players and intraday players. Mostly the weaker hands plays the overnight markets, right? And 65% of the time, market moves against those overnight players. 65% of the time, market moves against those overnight players. So it is not a good practice to have one profile for both overnight session and regular session. So commodities, if you want, you have to separate into 2 auctions or 3 auctions. If it is US market or crude oil, you have to separate into 2 auctions, minimum overnight markets. Second thing is regular market hours.
Okay.
So 5:30 is where the evening market starts, right? So till 5:30 it's overnight markets, and after 5:30 it's a regular market session. So that's how you have to separate, and then at least you need to have 2 profiles will make sense. And you have to follow you have to mostly follow NYMEX timings, because the crude prices are not driven fundamentally from Indian markets. The crude prices are mostly decided by what the NYMEX is doing. We just follow the price. They're nothing but a derivative of NYMEX crude. Am I right or wrong?
Yeah. Yep.
So you need to follow their regular session is your regular session. Their overnight session is your overnight session. And for gold, again, we follow CME gold. So these are the key reference levels. And you can also get the same thing in the scanners as well. So how to get the scanner is pretty easy. You have to go to new market analyzer. And then you have to add the templates. Mostly Bell Global will have a template for market analyzers. So let's say MP Ultimate Pro, I think 3rd October. We'll try that. Yeah, it's got loaded. So you'll be able to get the days value area high, value area low, point of control, where is the IB got traded, whether there is a ORR top is there, ORR bottom is there, or if there is any double distribution levels is there on the top, or double distribution reference level on the 30-minute time frame charts, or a triple distribution reference level, triple mechanical reference level. If there is any nearest prominent point of control, any AB poor low, poor high is there. So let's say I want to set up for Nifty. I'll right click, I'll go to add instrument, and I'll say Nifty futures. It might take a little bit of calculation timings because it's a lot of it's require a lot of computational activity. Right? So it might take some time, but it's a one-time setup. It gets you the list of data points. What is the IB range? What is the ORR? Whether there is any nearest ORR top or bottom is there. So 10,958, there is a ORR top. Then you can go back and check your charts and you can study it. It's not only one symbol, but you can have multiple symbols. Let's say I want to keep a Bank Nifty also. So I'll search for Bank Nifty. I'll go and search and pull up Bank Nifty. Bank Nifty. So it's going to take a little bit of time. In the meantime, we'll try to add ICC Bank, right? So right click, right, not allowing me to add. So it has to load first. And you can save this market analyzer. So you don't need to do, it's a one-time setup. After that, you don't need to do the setup again and again and again. So now let me try to add ICC Bank. I'll go to add instruments. I'll say search. I'll add ICICI Bank. Now the Bank Nifty is completely got loaded. So now you know what are the nearest double mechanical reference or double mechanical reference, or if there is any triple mechanical reference level, any nearest prominent point of control, any nearest AB poor, high poor lows, any nearest failed auction, any nearest G2, G3, everything will be unloaded over here. But there is one more setting is required. If you are using stocks, that the TPO size by default will be using for one TPO, right? Which is not optimal TPO. So what you have to do is that you have to go and edit the TPO settings. Go to the properties, not the properties here. So go to columns. I think it is columns. So go to the columns, and from the columns you have to select the TPO settings. Let's say the TPO settings for AB power low, which is very critical. AB power low. Go to AB power high or AB power low. Select it, and then select the TPO size for ICICI Bank as 2. And AB power low, again go back and select the TPO size as 2. Power low, power high, you have to set the TPO size for each and every settings. Right? So and that is one time setup. So again 2. Power high, the TPO size as 2. The TPO size should be set for each and every reference level. There is no common TPO size available in Ninja Trader. That is a painful activity. But once you are done with that, apply it, automatically the power high, power lows, you'll be able to get the appropriate right values. Right? So again, a recomputation will happen. This is one time painful setup, but once you're done and you save it as a template, you don't need to redo again and again. Now, if there is any AB power low or AB power high, it shows you the list of AB power lows and power highs in the list. It's a lot of computation time.
And for the US data feed, it's free for NT8?
It's free for a month. So you can get from You just go to ninjatrader.com, register, and it will ask for CQG information. You can go and connect CQG information here. Usually you will get 1 month of free trial. And you will get the nearest AB per high. You'll be able to get it. And likewise, now you can save this as a template. Go to template, save as. So next time you don't need to do the same settings. So let's say this is my template. You give a name. So next time you open all the charts, all the settings, whatever you have done, everything will be appearing without any without redoing all these parameter workouts. The entire next time you open a market analyzer, right click, go to template, load, and select my market analyzer, my template, and load it. Automatically all the levels will come. And so if you're it's better to load all the 20 symbols in one settings. All the 20 symbols, to load all the data set. The scan will take a little bit of slower timing because market profile involves a lot of difficult calculations, and all these calculations are going to take a little bit of time. So at least 5 minutes is what the total time which is required to compute for 20 to 30 symbols. So 20 to 30 symbols, we can have a list of where the AB poor high, where AB poor low, or where a failed auction is there. You don't need to open all the 30-40 charts to look into it. You can able to visualize from the market analyzer itself. Right. So where the G2 high is there, where the G3 high is there, then you can go back to the chart, study the chart, then check whether it's an appropriate trading entry or not, how I can plan this entry. Then you can think about it. And as usual, value area high, value area low, point of control. If somebody is very new to market profile, they want to know where the value area high, where the value area low, where the point of control is getting developed. They can use it, but I don't use that. Instead, you can use G2 high, G3 high, or failed auctions, or double mechanical reference, triple mechanical reference, ORR, prominent point of control. These kinds of things which helps you to set up what kind of opportunity was going on. So immediately you can focus only on those stocks, and then you can act into the market profile charts. Right. So nobody has a proper market profile scanner. So this is a very first attempt from Bell TPO to bring some useful scanners in the very first attempt. Right. So going forward, whatever we feel like it is a critical stuff, we will try to induce into the scanners or induce as a form of a reference lines. So we feel like these are the top priority as of now to bring it as a scanners and as a reference lines as well. Which these days it reduces the odds of my timing in terms of plotting the reference level every day. Otherwise, every day I have to plot a reference level, every day I have to remove. Some other day I'll figure out why I drawn this reference level, where exactly it's matching. I lose a control of it. So at least now half of the problem has been solved. Still, some of the reference level I'll draw manually. Most of them comes automatically here. Right. So I think we can, if you have any questions, we can take questions. Otherwise, we are done for the day. And again, we'll catch up again on Monday around 9:30 to 10:30, the usual timings.
Yeah, I have one doubt, like when to use a tick level and the range.
We usually use tick and range in the order flow perspective. In order
Okay.
flow charts, we generally use, let's say, my TPO size. Based upon my TPO size, I'll try to use I'll try to change my order flow charts. So let's say my TPO size is 20. Then I use 8 times of the range bars. So means 20 into 8 is 160. I'll prefer using 160 range. If it is 25, then you have to multiply by 8. You'll get 200. So means each and every 8 bar range, it creates a new candle. Unless that 8 bar range is not broken, it will not create any further candle at all. Even here also, you can look for any possible Okay, so this is one of the place where you can see a unfinished business. This is one unfinished business, 10,907. So price always has the odds of coming and clearing back. Maybe there is one more unfinished business is there, if I'm not wrong. It was there in the 5-minute chart. I also posted in the Slack as well.
So it's usually you need to check the 5 minutes and then the range. That's how the
10,895. There is one more unfinished business is there. So I get used to looking into unfinished business on a 5-minute time frame, but it doesn't matter. You can go and check out in any other time frames also, but preferably lower time frame because it is an intraday trading odds. There's no point of looking into 30-minute charts or on hourly charts where the unfinished business is there. Usually you don't get on a 30-minute time frame charts, but on a lower time frame like 5 minutes or 3 minutes or something like a range bar charts, you can go and check where the unfinished business is there. Wherever it is not getting cleared, you can anticipate that levels to get cleared in a very short term. This is one of the reference we are thinking about. Even if there is a good gap up, market has the odds of coming down and coming down till 10,905 or 10,895 levels. So we're thinking about it. Let's see Monday how it goes.
okay.
Yeah, so I'm going to stop the session here, and I will again get back on coming Monday, right? Tomorrow we don't have any sessions, so we'll be catching up on Monday. Thank you.
Okay. Yeah, the document is shared, no?
I'm going to share right away.
Okay. Yeah. Thank you.
Thank you.
Thank you.
Yeah.
Thank you.